Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and today I have Heather Kilpatrick with me today. I didn't throw out the Barkley
I know,
this time.
that's okay.
Welcome to Mortgage Mom Radio. What do? We talk to you all about everything real estate, all things real estate. We are giving you mortgage education and real estate education and everything that you need to know. We're keeping you up to date on the topic, interest rates, underwriting guidelines, different kinds of loan programs available. That is what we do, and it's all free of charge for you guys. So check out our YouTube channel, watch all of our previous episodes, watch our home buyer workshop. Make sure that you guys subscribe to the YouTube, like the video, please. It helps us with our algorithm. And if you guys want to know when we go live each week, you've got to text the word mom to 844-935-3634. And this is when I put my co-host of the day.
Oh, no.
How do you spell that, Heather?
We lend for you.
That's right.
Yeah.
So it's 844-WELEND and the number 4. So 844 we lend for you. That is how you call our office. That is how you send a text message to that number. Make sure that your message says mom. That is how you will get a link once a week to know that we went live. That is how you will get a link to download our phone app, which is absolutely free. Got tons of things in there. The phone app is really cool.
Yeah.
The calculators are awesome. You can watch the YouTube. You can listen to the podcast. You can contact us. You can call us from the phone app. But the calculators are my absolute favorite, especially if you have an FHA loan or you're looking at getting an FHA loan. If you have a conventional loan with less than 20% down, you want to know what that mortgage insurance is going to cost you. If you're a veteran and you're looking at a VA loan, you want to know how much that the funding fee is going to be added. How much is that payment going to be with that funding fee being financed? So it does all of that for you. It's really,
it's
really
amazing.
phenomenal. Yeah.
And I think yours is the only app that I've seen that actually puts in the MI and that funding fee. A lot of times you'll go on and you'll see something where it's automatically 20% down, which means you wouldn't have MI if you're a conventional loan. And people come back and they say, well, I saw it was only $2,000. And you're like, yeah, but you have MI and that adds a couple $100 on. So it's a big difference. So it's really nice that the app does all of that for everybody so they don't even have to guess.
No, it is. And then not only that, but the app is going to ask you what your credit score is. And so if it's a conventional loan, it's actually going to calculate right through one of the, we are connected.
Right.
The app is connected to one of the mortgage insurance companies. And there's 5-6 different mortgage insurance companies. So keep in mind that we're only connecting to one to give you quickly a payment. But there are options to still shop the rate of that monthly mortgage insurance. But it gives you a really solid basis, a very close number, that you can count on, right?
Exactly.
When trying to figure out, can I qualify for this house, or is this within our budget? Sometimes you qualify, but you don't necessarily want to make that payment. So that phone app is really phenomenal. You guys really should get it. I don't know about you, but I hate getting on my computer when I'm at home. I am on my computer 24/7 at work.
Yeah.
So okay, maybe not 24/7.
No,
let's call
24/7.
it. Yeah, let's call it
23.
Yeah.
26 and a half.
Yeah. It's a lot. It's a lot. So the last thing I want to do is jump on my computer when I'm at home. And so it's really nice to have the phone app to be able to do everything. Obviously, if you go to the website, if you go to mortgagemomradio.com, you have all of the tools that you have from the phone app there as well. But definitely, you can get that phone app. It's pretty nice.
It's quick too. So like when you're working on it, because I use it to work with clients when they're like, hey, can you give me an idea? I'm like, absolutely. And I'll usually walk them through putting the phone app on there, and you can add, one price, 600,000, go back. You can even email it to yourself and then go back and change it and do 650. So you can get an idea of what the difference is right there in your own home at 1:00 in the morning.
Yeah, exactly. Well, yeah. And without having to call anybody, without having to email anybody.
Yeah.
And then also through that phone app, if you're not sure what interest rate to use or you don't know what to plug in for taxes, what percentage should I put in? And this is not just for purchases. You can do this for refinance. So it's giving you that option when you first go into that calculator. Is this refinance? Is it purchase? Is it budgeting?
Right.
So it's going to give you that option. But if you don't know what to put in, there is a button that says more. And then it says ask mom.
Yeah.
Ask mom. It's an email. Send me a message and say, what interest rate should I plug in right now today, just to get a general idea of where these payments would be. And I'll walk you through it. I'll give you that information. So the phone app is super nice. If you don't have it already, or if you are not already subscribed to get the weekly text message telling you that we are live so that you don't miss the show, make sure that you text the word mom to 844 We Lend For You. So that's 844-935-3634, or it's 844 WELEND and the number 4. So we have Heidi on. She says, you both look great. Thank you so much, Miss Schlegel Points. We have been missing you. We've given Heidi some time away from the show. We all know how much she loves doing it. She does. She actually, now that she's been doing it with me, she loves doing it. But we have been pretty busy, so I've been giving her some time off and making you do it and Larry do it and Carrie come on.
Your favorite.
Yes.
It's not me.
We've had everybody on the show, so we've given Heidi a little bit of time. If y'all are big Heidi fans, she will be back next week. Can't wait, and we'll have some great programs and things to talk about. I know that she's just been spending all of this extra time not being on the show, actually looking up new
topics.
Fabulous things for us to talk about. Just kidding, but we'll have something good. So Heidi will be back next week. Thank you for watching, Heidi. We love you. And so we're going to go to a very quick break.
Okay.
And then when we get back, we're going to do our catching up with mom, which we haven't done.
Yeah.
And then I really want to get into mortgage insurance. So I know last week Carrie was on and we kind of touched it a little bit, talked about, refinancing FHA. And it was like right at the very tip end of the show.
Yeah.
And we are seeing this week, for whatever reason, things come in spurts. And I've said that numerous times, but we have been seeing quite a few loan applications come through from clients who have both conventional and FHA mortgages, but they have mortgage insurance.
Right.
And we've had an opportunity to get them in process to get it removed.
Right.
So we're going to talk about how we do that, but we're going to catch up with mom, talk about mortgage insurance. And then obviously we're going to take all of our listeners' questions. So if you guys are watching right now, give us a thumbs up, tell us that you're here. If you have questions, put them in the feed. That is what this is all about. It's an interactive show. We want you to ask the questions. Every question you ask, there are 10 more people just like you that are thinking the same question. So your questions are helping everybody who is out there listening. And let me just tell you, we've got a pretty big following at this point between Washington, Nevada, California, Texas, and Georgia. So we've got 5 states going, looking to get on more, but we're really trying to bring you guys all of the information and education that you need, and we're doing it for free. So follow along, know when we go live, jump in, ask your questions, help us help you make this a fantastic show. So we're going to take a couple minutes and we'll be right back. All right, and welcome back to Mortgage Mom Radio. Again, if you guys are listening over the weekend by radio, you got to check it out when we do the show live on YouTube every Wednesday. That is how we get this sound off to the stations for the weekend. But you just totally missed our fabulous Halloween commercial. We've got actually like 3 of them, so I'm going to try to get those all in today. They're like 10 seconds long.
Last
It
week.
is. I know we got to get them all in today. And then guess what? Mikey's got to go back to working on new commercials. But they're fun. They're like 10 seconds long. They give us a second to just take a sip of water and, kind of like, pull our shirt down that we feel like it's riding up or something. But anyway, you guys have got to watch to be able to see those commercials. They're super cute. That was a cute Halloween one. And, speaking of catching up with mom, it's all about buying a house, know your neighbors, call Mortgage Mom Radio. Let's get you ready to go. Right. So for me, I actually just got news like seconds before we started that the loan for the house that I'm buying just funded.
Congratulations.
Thank you.
New
So
homeowner.
yes. So that is super exciting for me. So that is my catching up with mom. Now we've just got to get my sale closed. So that's going to be in a couple of weeks. I've got to get my renovations started. So for many of you that are just tuning in for, the first couple of times, you haven't really gotten to know me or the team. I've got a little guy who is autistic, and we're very, very, very delayed, and he's 5. So it's like trying to chase a 2-year-old in a 5-year-old's body. He's very strong and, quite smart, but nonverbal. And again, little delayed, very delayed. So for us, buying a 2-story home has been something that we never really wanted to do, but it was practically impossible to find a single story. They're very hard to find, especially here in California. And in order for us to move into that 2-story home, we have to completely replace the entire banister so that we've got, I don't want to close it off into walls, because now you're going to close up everything, right? You lose that big open look. But we've got to replace the banister with something more stable, and then wrought iron all the way to the ceiling, just to make sure that he is very safe. So we can't even consider bringing a box into the house and unpacking anything and letting him roam or run until we get that done. So I had to hurry up, get my loan closed so that we can get contractors in there to get that piece started, so that we can then move out by the time that our house has to close, right?
You bring a box in and you turn your back for 1 second in the stairs with him. He would, oof.
Yes, very scary. So for that's
it's smart to be able to do that, is to do the renovations ahead of time if you can.
Yeah, absolutely. So that is my catching up with mom, but woohoo. So Heidi gets on, she says, when am I going to see it? Okay, I will send you a link. I'm sorry, Heidi. I will send you the link to the listing so that you can see what we got. But yes, I'm very, very excited. So we're, after we finish the show today, we're going to definitely probably pop open a bottle of wine or something. I haven't really been barely drinking at all since, I've just lots of things going on. But we're going to maybe drink today.
That sounds good. I'm in.
Very exciting. So how has your week been?
It's good. The weather. We're in Southern California for people that are not here. And all of a sudden it went from really nice and warm to really cold and windy. And I told my kids the other day, I said, oh, winter's here. And my one son says, no, it's not yet. And I said, yes, it is. Usually it's like the day after Halloween.
Right.
And now it's here and it's cold. And I like the cold, but I decided I don't like the cold. I'm already over it.
Well, it's always, it's freezing or it's really hot in the summertime. You're like, I can't wait for winter to get here. And then it's cold and then can't wait for summer to get here. Yeah.
I'm born and raised in Southern California, so I need the warmth. I'm like a lizard. I just need it. So like getting ready for Halloween and telling the kids you're going to have to bundle up actually this year is surprising. Normally we go in, short sleeves and maybe a pair of jeans and
right.
This year.
Yeah. No, I'm actually very excited that it did all of a sudden very fast. It turned and it was really nice to have rain. We haven't had rain.
Poured.
We've been, and it poured, which was really nice. And I'm really, really hoping that is a sign that this is going to be a very wet winter, because it is something that we absolutely need.
Just after you move.
Right.
Yeah.
And trust me, Nevada, where you guys are listening to us on radio, and Washington, you guys have all the rain you need. But there's a lot of us that are counting on Lake Mead and Lake Powell to get refilled, and
the mountains.
Yes, the mountains need snow. So hopefully that was a precursor to an absolutely drenched winter. That is what I am going to hope for. And we just need to bundle up. Think about it. I'm from Illinois, okay? Like so, this time of year there is
You're used to snow.
Yeah, well, it's not snow yet. Now, however, my mom just got back from Montana visiting my aunt.
Yeah.
Snow. I mean, I'm talking like a lot of snow on the ground. So can I do that? Absolutely not. But I am from Illinois. It is usually Thanksgiving-ish. Sometimes there could be snow. Most of the time not. Usually it's in the low 60s.
Really?
50s in November. December, sometimes you'll get sometimes a little bit of snow. You don't usually have a white Christmas in Illinois. Not usually. Sometimes you can. They really get dumped on heavy in January, February, sometimes March. I can see my dad's on. He says hi. He can pop
Flooding.
in. He can pop in on the Illinois winter, but you know, I think we just need the rain so bad that I think everybody this year is just going to have to put on some galoshes, put on a couple of layers, get used to it, and let's pray.
Safe.
Yes, and drive safe.
That's
and
the
let's pray. Let's pray that water comes. So
I'm happy for it. I like it. I like the rain. I just like it from in my living room looking out at it.
Yes.
I don't like driving in it. You know, you got to do what you got to do.
Oh, I don't mind driving in it. I'm from Illinois. You just plow right through.
The people that don't know how to drive it.
Yes, no, I know that's the scary part for sure. All right, so we are going to get into the mortgage insurance stuff. Like I mentioned, I think that one's really important that we talk about that because there are a lot of people out there that are paying money that they shouldn't be. So if you have been listening, you got to hear our catching up with mom piece, and we are going to move into all of the good, great education and information that we can possibly provide for you. You guys want to be part of the show, and you're listening on the weekend by radio. You got to see us do it live. It's every Wednesday at 1 o'clock Pacific time on YouTube. Best way to know that we went live is to get a text message when we do. And if you text the word mom to 844-935-3634, you will get a message one time per week. I promise I don't bother you more than that. All that it is a link letting you know that we are live. You can click on that link and it will take you right to the show. So if you want to opt in for that, you've got to text the word mom to 844-935-3634. Heather, what does that spell?
1-844 We Lend for You, WELEND, and the number 4.
There you go. Yes. She did it. See, every time. If you're a co-host on my show, you got to know it. It's 844 We Lend for You, WELEND, and the number 4. So my cousin Jeff jumps on from Brandolina Group, and he says, hi, Mortgage Mom and Heather.
Hi, Jeff.
Thank you for the information. Thanks for jumping on, Jeff. Appreciate it. So, all right. So we're going to take super duper fast break. Okay. Again, they're like 10 seconds long when you're watching on YouTube. And when we come back, we're going to start talking about removing mortgage insurance, conventional loans, FHA loans, all that good stuff. Sound good?
Yeah.
All right. Here we go.
Debbie Marcoux.
All right, and welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and this is Heather Kilpatrick. So is it Heather Kilpatrick? It's Heather Barkley Kilpatrick. I always go back and forth. You're just Kilpatrick, whatever.
Doesn't matter. Heather Barkley, Heather Kilpatrick, Heather Barkley, Kilpatrick. Heather
It's
Kilpatrick,
like my
Barkley.
Miss Slagle points. Like, come on, guys, just one last
my
name.
multi-name girl.
Yeah, it's just one last name, guys. Come on, get rid of that hyphen. Anyway, all right. So welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. This is Heather Kilpatrick, and we are talking all the education and information that you need about all things real estate. So whether you're buying a home, selling a home, trying to refinance, whatever it is that you need to do, that is what we are here for. The very best shows that we have are when our audience members ask us questions. Put it in the feed. Let us know you're there. Tell us you're watching. Say hi. But when you ask questions, trust me, there are numerous other people that have the exact same question. Yeah. So you are only helping everybody by being that person that was willing to step up to the plate and ask the question. So please do that. I will read it out loud and I will answer it for you. But today's episode, and you guys know that we're live when we make mistakes like that.
Half show.
It sure was. Today is the episode.
It's an episode.
Right?
So epic. It's an episode. An epic episode.
I absolutely love it. All right. So today's episode, we're talking about removing mortgage insurance. And I think it was such a great topic that we talked about really at the very end last week with Carrie. Yeah. And I really wanted to kind of drive that home again today because it can save so much money for you. Mm-hmm. So mortgage insurance. What is mortgage insurance? I know everybody calls it something different. What are some of the things you've heard it called?
Oh, MI, mortgage insurance, PMI, private mortgage insurance.
Right.
That stupid fee I have to pay to the lender. whatever you want to call it. Yeah.
Lots of names for it. Lots of names for it. So mortgage insurance is something that you pay when you buy a home and you don't have a minimum of 20% down payment in most cases. There are loan programs where you don't have the mortgage insurance and you don't have to pay it. On mortgage insurance, on mortgage programs such as FHA, you will pay mortgage insurance regardless of how much money that you put down. So there are a lot of people that are in an FHA loan because they bought with very little money down, maybe 3%, conventional loan, 3% down, right? FHA, 3.5% down, putting that bare minimum down to get into that home that they wanted to buy. And they did get slapped with that monthly mortgage insurance. For FHA, it's called a mortgage insurance premium. Like you said, some people call it PMI, private mortgage insurance. It's called different things based on the program. And you'll hear lenders use all of the terms and the words interchangeably. It's all at the end of the day, an insurance that you pay on top of everything else, your principal, your interest, your taxes, and your insurance.
Right.
When you have less than 20% down. So how do you get out of that mortgage insurance?
Great
well,
question.
If you have a conventional loan and you have the equity in your home, sometimes, and I say sometimes, and we're gonna focus on conventional first, then we'll talk FHA, okay? Because I think that it's gonna get confusing to start interchanging them.
I agree.
So let's go conventional first. So if you have a conventional loan, you put less than 20% down, you have a monthly mortgage insurance premium, and you want to get rid of it. How do you get rid of it? Okay, so there's a couple of ways.
Right.
Number one is always you can refinance.
Right.
Right? Refinance the loan, get a new loan, take a new interest rate, get rid of the mortgage insurance. Number two way that a lot of people don't know is that you can actually call the lender. So you get your statement in the mail.
Right.
And you've got your, toll-free number on there. You call that toll-free number and you ask that mortgage company, will you remove my mortgage insurance? Sometimes they will, sometimes they won't. Why? Why is it sometimes yes, sometimes no, right?
Yeah.
So there's a lot of kind of factors that go around the rules of servicing and mortgage insurance and all that good stuff. So number one, typically you are going to have to pay the mortgage insurance for a minimum of 12 months from the time that the loan is originated. Okay. So that is number one to know. So if you try to call before that 12-month period, you haven't had the loan for a whole year, they're going to make you pay that mortgage insurance. They're not going to get rid of it. That is about 99% of the time with servicing companies.
Got it.
Okay. So if you're within that 1 year period and you don't have that mortgage, or you shouldn't pay that mortgage insurance anymore because your property's gone up in value, then that's when you call us and we help you refinance that property to get your
mortgage insurance off.
Right. Get it removed. Right. Okay. So the other problem is that many times your home has gone up in value, but you haven't actually paid the balance down.
Yeah.
Right? So the mortgage insurance company or the mortgage company is going to tell you, I'm really sorry. We know you've had the loan for 2 years, but we cannot remove the mortgage insurance because you haven't gotten your loan to value. But I have.
Right.
But my house is worth, $500 today and I bought it for $300 and I've got it, right? They're looking at what did you buy it for? What was that sales price? And where is your current loan balance today? And what is that loan to value?
Right.
Not what is your home worth and how much do you owe? Now, every now and then, there are some servicers that will allow you to order an appraisal to show them that you have the equity to get the mortgage insurance removed. 9 times out of 10, though, they're not going to allow that. They want you to pay it down. So even though sure, you could keep your current loan with conventional, you could keep your current interest rate, you don't necessarily have to do a refinance to get rid of that mortgage insurance. 9 times out of 10, you do need to do a refinance to get rid of the mortgage insurance because they're not going to remove it because your home went up in value. You didn't pay your balance down.
Right. And I think that's a big misconception too, is sometimes people think, well, I paid $500,000 for my home. So I didn't put 20% down, but it's only $100,000 at 20%. And now my house is worth, $600,000 and 20% of that is only $120,000. And I'm less than that. I'm perfect. No, you really have to take it off of what did you buy the property for? How much did you put down? And where is that with you today? So if you bought it for $500 and you only put 5% down, your loan was $575. If it's $550, it's still not going to qualify.
Right. You didn't pay it down enough.
Yeah.
And that's typically what they're looking for. And like I said, every servicing lender is a little bit different.
Yeah.
So it absolutely does not hurt to pick up the phone and call the toll-free number on your mortgage statement and find out what are the rules for your loan.
Right.
Can you get your mortgage insurance removed if your property's gone up in value?
Yeah.
Will they order a new appraisal for you and possibly remove it?
Yeah.
Sometimes they will, but the majority of the time the answer is no. You need to have paid it down, paid down the mortgage balance. So
Right.
in that situation, you need to refinance.
Right.
Now let's go to FHA. It doesn't matter what you do. You're not getting your mortgage insurance removed.
Don't bother calling the 800 number.
You need to refinance,
Yes.
right? In order to get that mortgage insurance removed, unless you put down more than 5% and you financed at a 15-year fixed on an FHA program, mortgage insurance is for the life of the loan. No matter what balance that you have, no matter how long that you've been paying on it, you pay the mortgage insurance. So the only way to get rid of that mortgage insurance is to do a refinance. So with FHA, 100% of the time, all right, let's call it 99.9%
Unless
because
you have
most
that
people
rare 15-year.
yes, most
FHA
people
loan.
are not doing a 15-year fix.
No.
I have written that one time in my entire career
Yeah.
that dates all the way back to 2002 as far as loans.
Yeah.
Real estate was before loans. So it's since 2002, I have done one FHA loan that I've put somebody in a 15-year fixed. It doesn't happen very often. It's not usual. So 99.9%, if you have an FHA loan, just call us. Let's do the application. Let's get you moving forward if you have the equity to get the mortgage insurance removed.
Right.
Conventional loans. If you guys have a conventional loan and you have mortgage insurance today, call your lender and ask, can we get it removed? They're most likely going to tell you no. And then you're going to pick up the phone and you're going to call us and we're going to get an application started to get that mortgage insurance removed.
Yeah.
So why are we talking about this right now? Why, people are listening and they're thinking, well, but how do I know that I can get it removed? How, so let's
Yeah.
talk about why is this a big thing right now? Why are we talking about it? Why is this show about it? Right? What is the first thing, Heather, that comes to mind as I'm going, we've got to talk about mortgage insurance today. Why do we have to talk about mortgage insurance today?
Well, for me, I think it's because the rates are going up. And if you have the mortgage insurance, you want to take advantage of refinancing now while the rates are still low to get that off. Otherwise, you're going to refinance later on and the rate's going to be higher and it's going to kind of be a wash, or you might even be paying more. So it's really, really important right now to call and get that MI removed if you can, because we want to help you keep your rate as low as possible.
Right. So we have seen unprecedented.
Your words today.
They're bad. They're bad today. But we have seen growth, right?
Yeah.
We have seen equity into properties and we have seen
Crazy
it
equity.
fast.
Yes.
We have seen it fast.
Yes.
So I can tell you that I'm doing a refinance right now. It is in process for a client that we closed back in June of 2020. They did an FHA loan, minimum down payment, 3.5%. And we now, are you ready?
Yeah.
They have 25% equity in their home.
Crazy.
Okay. So now keep in mind, interest rates in June of 2020
Yeah.
were better than what they are today. Right.
Yeah.
Okay.
I know it's coming.
But
Yeah.
even giving them a new conventional loan, removing the mortgage insurance, giving them a higher interest rate than what is on their current FHA, they are still saving almost $300 per month.
Which is crazy. That is over $3,600 a year. Over.
Right.
That's like making a mortgage payment for free. I was telling a client earlier today, I'm like, you pay for 11 and you get one free. That's kind of what it reminds me of,
Right, exactly.
It's free money.
Yeah.
Totally free money.
Right.
Once you start saving it.
Oh yeah. So for them, it absolutely makes sense.
Yeah.
And again, they were June of 2020 that they made that purchase. Now there's going to be pockets, there's going to be areas
Yeah.
that maybe didn't appreciate like that. They may have just really gotten in at that perfect time on that perfect house right before maybe that area exploded. I can't tell you that everybody is going to have those same results, but it is something that if you purchased in 2020 or sooner or earlier than before then, you should be calling us to find out what the opportunities are if you are in a conventional or an FHA loan and you have the mortgage insurance. Because we don't necessarily, this isn't always, we talk a lot about pulling out money, doing home improvements, doing renovations, paying off debts, doing a student loan refinance, paying off the student loans, right? We talk a lot about that quite frequently, but really, you don't have to pull out money to do a refinance.
No.
You don't have to have a reason other than you want to save money.
Right.
Right?
Yeah. And there's some people that have MI that I've seen that have a rate at 4.5% still. And it's like, oh, no.
Yeah.
Let's refinance you, get rid of that MI because you do have that equity in the home, and then also lower the rate, and it's just so much more money in your pocket every month.
Oh yeah, no, it's absolutely better. And like I said, those clients that are in process right now, you know, their interest rate was lower because they did get the loan in June of 2020. But we're talking about, I think it's like a half a point, like a 0.5%, right?
But they're still saving money.
They're saving a significant amount of money. The interest rates are still low. We're getting into a loan that's in the low threes, and as far as the interest rates go. My first question to them was, how long do you plan on staying in the property?
I ask that a lot.
Right? And this is it. They said, this is it. We're staying here forever. Okay, so if you're staying there forever, you have an FHA loan right now. We know interest rates are on the rise. We know they're not going backwards. Guys, they're not going to be 0 next year. They're not going to be 1% next year. They're not going to be 2% next year. They're not going to be 3% next year. Okay, so we know that they are on the rise. This is the time to cash in and lock it down for that 30-year. If you are in an adjustable rate mortgage, if you are in any kind of a mortgage that could possibly change or maybe not change, like an FHA, it's never going to change for you. This is the time to be locking down the rate for the long term, getting rid of the mortgage insurance, hunkering yourself down, buckling down into what you know, into those best,
what you want.
Best numbers that you can possibly get into. So again, I hope that anybody that is listening that has bought a home, I would say, where would you say, I mean, you've been in real estate forever. Where would you cut it off? Would you say if you bought something in February of 2021, would you say March 2021? Would you say November 2020? Where would be that number in your brain that you would say, if you're out there listening right now, ears perk up, call our number, talk to somebody here at the office. What is that date in your brain?
I think probably about say July, August of last year. So maybe almost about a year ago. We just closed one where originally did the loan for them on the purchase in, I believe, July of last year. And we just did where we got their FHA redone and took off their MI. So right there, we were kind of pushing that 20%. So I would probably say if you've closed escrow on a property before say July 2020, I think that's a really good guess. But there are options for those that may be closed in October or November too, if you don't quite have the 20%. And I don't know if we want to get into that or not.
No, we do. And I was hoping that you were going to read my mind because quite frankly,
we've been friends too long.
Quite frankly, we want to really look at anybody that is from, I would say, April 2021. Or before that, right?
I really
and
think
why?
it depends on the location. For sure, Southern California. If you bought March, April of this
it's
year,
everywhere. It's everywhere. We're in every market. Every market has gone absolutely bonkers.
Yes.
Right?
Well, I was going to say some of them are even more crazy. Places you wouldn't even think. Washington is crazy. Nevada is crazy. Even Arizona. So like for sure, give us a call and we can always, you know, see where the prices are at kind of relatively. But I would say if you've closed any time before March, April of this year, you have a pretty good chance of either getting it removed or taking steps in other directions to get it removed. And
right.
So that would be a good thing.
So, which is what I want to talk about when we get back. So if you don't have quite the 20% equity, but you have more equity than you did when you bought the home, then what are your options? Is there something that you can do? We're talking about interest rates going up. We're talking about get buckled down, get in to a loan right now that you can keep for the long haul, right?
Yeah.
So what do they do if they're in fear of rates are going to go up, I'm going to get stuck in this mortgage insurance. How do I get out of it? So let's take a quick break and we get back. We're going to focus in on that. Sound
Perfect,
good?
yeah.
All right, here we go. All right. Welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. This is Heather Kilpatrick with me, and we are talking all about mortgage insurance today. What is Mortgage Mom Radio? If you've never tuned in, we are all things real estate, mortgage education for you, real estate education. If you're buying, selling, thinking about getting a loan, your first purchase, or refinancing the home that you have, this is for you. We are Mortgage Mom Radio, and it is a free education program giving you all of the information we could possibly bring your way. That brings me to a quick topic of if there is something you'd like us to talk about, or if you have a question and you are too shy to jump on the show on Wednesday when we're live and put it in our feed, make sure you guys send me an email. Send an email to questions@mortgagemomradio.com. Number one, your emails do get answered by me personally, yours truly. You will also, if you've got a topic you'd love to hear more about, I would love to explore that and possibly use it. So please feel free to send that out into the universe with some good vibes. Also, ask those questions because I am going to respond to you and I'm going to get you the answers that you're looking for. So it is okay if you are a little bit shy and you do not want to put your name in the YouTube feed on Wednesday at 1 o'clock. So again, remember that if you guys want to follow along and watch us do this live, it is every Wednesday at 1 p.m. on YouTube. Make sure that you look up Mortgage Mom Radio and you subscribe to the channel. Please give us that thumbs up on the video. It truly helps our algorithm, and make sure that when people are searching for mortgage questions on YouTube, that Mortgage Mom Radio comes up in the feed. We're trying to bring this to you guys to get you all the information that you need, and we're doing it at no cost to you. Why do we do that? Well, we're hoping that you're going to reach out, ask us questions, and then let us help you guys get your loan done. So that is how you help us. But please go to YouTube, search for us, subscribe to the channel, and text the word mom to 844. We lend for you. So it's 844-935-3634. You want to spell it? 844
WELEND and the number 4.
There you go. I love it. All right. So we have Christian. She jumped on, or she, I believe it's a she.
Yeah.
Hello. Love you guys. Thank you so much, Christian. And my mom jumps on and says, hi, girls. Mama, thank you for funding my loan today. I love you for that. And Christian says, I'm back. I got approved for $300,000. I'm in LA County. Nothing I can buy. Should I hold off or try for a condo? That's a great question.
Well, personally, I think if you're renting, you should try for a condo, because anytime that you're renting, you're building somebody else's equity. And why build somebody else's equity when you can take that first step? Even if it's small, just buy what you can afford and get your foot in that door and build your equity, and then just kind of rise up from there. And I think that's super important. I always tell people, do not build others' equity when you can build your own.
No, and then not only that, but here's the piece that I always like to talk to people about too, is that if you're smart, unlike me, and you follow this rule, you will actually have a real estate portfolio someday.
Yes.
So number one, buy as small as you can live in. So if you can buy a 1-bedroom condo, start there because that's your primary residence and you can get in with a low down payment.
Right.
Then once you've saved up a little bit of money and you're ready to move up, go buy yourself a 2-bedroom townhome and live in that and rent out your condo.
Got it.
And then after that 2-bedroom townhome, you've saved up and you've outgrown that one, then go buy yourself a 2-bedroom house. Then do the same thing, 3-bedroom house, then 4-bedroom house. You've now bought every property with a low down payment, and you now own a portfolio that is going to be part of your real estate, retirement plans down the road. It's part of your portfolio. So question for Christian, yes, go find a condo. Do whatever you can do to get into real estate. That is the most important thing that is going to be part of your portfolio for your retirement in future.
I think the biggest misunderstanding about building a real estate portfolio is people think they have to start off at like a 3-bedroom, 2-bath house with 1,500 square feet for the going, median home price. You really don't. And when I started building my portfolio years ago, I started with a super cheap condo in not a great area, but I wound up selling it a few years later and bought a better one. In hindsight, I should have kept that one.
Oh, no, yes.
And bought, but I was young and I didn't know any better.
Yes, I did the same.
Yeah,
I did the same.
Exactly.
Yeah.
That's why, but you learn. It's just baby steps. You can't jump right to the big home that you want. And I will tell you, those little properties rent so quick, and you can get some really good tenants in there. And that's an amazing way to just build. And then by the time you're older, you've got this awesome portfolio of real estate.
Right. Absolutely. So the answer is yes. And thank you so much for stepping up and asking that question. I'm sure somebody else has been in your same scenario. Prices are expensive. And like we said, they're expensive everywhere. I mean, you know what we forgot is that we are in Arizona because we're in Havasu on radio too. You know, but we have seen prices in every single market go through the roof. Our Seattle peeps, you guys are going through the roof, and Texas through the roof, Georgia through the roof, right? Everywhere is gaining, you know, home prices are going up in value and they're gaining equity, and it's starting to become less affordable, and you can't possibly get into that single family home from the very beginning, and you might need to be willing to be, you know, to go into something a little bit smaller or attached or, you know, that maybe you didn't want to before. So definitely, again, at the end of the day, real estate is the most important thing, and you do need to own some. And if you can do it smart, right, you could end up owning quite a bit of it. And so, you know, definitely I think that was a fantastic question, and we want all of you that are listening to be part of the show. We want you to be participating and, you know, asking us those same questions like Christian did. It's very, very positive, and it helps us, you know, give you answers that you've been thinking. So definitely,
you know,
again,
I have a great question that somebody asked me once, and I know how I answered it, but they live here in Southern California. And they were renting, and they couldn't afford anything here in California. And so we started talking about buying out of state. And what if I buy out of state and, you know, I know you and Carrie were talking last week about Airbnb-ing it, like making it, you know, and that's a great way too, is it doesn't have to be where you live. Maybe if you want to look at buying something and renting that out and maybe building equity on that home to get you a step up. If you're like, I just can't afford where I live. Right. Think outside the box.
Well, let's think way outside the box here for a second, right? So if the median, let's say that you could afford a home in, you know, California for 500,000, and that's not going to get you anything, right? And you were going to put 5% down on that 500,000. That's 25,000.
Right.
So if you go into another state where you can get a more reasonably priced home, let's call it 200,000, and you're buying it as an investment, and you're putting 20% down payment, right? Yeah. That's 40 grand. So, or if you're doing it as a second home, that's 20 grand. Right. So you might be able to buy it as a second home with the same exact down payment for a cheaper priced home than rather than 5% in LA. So again, it's something that we're going to talk to you about. You can call us. We can talk about the different options. What have you been thinking, your plans, and, you know, help you, you know, kind of figure out what are the opportunities, where you live, you know, where you live, what is my opportunity here? And then what is my opportunity in another market? Right.
Totally.
And we can definitely take you through all of that. So how do you do that? Okay. Well, number one, people like Heather are on call on the weekends. And so you guys can go to our website, go to mortgagemomradio.com. There is a book appointments button. Go ahead and click that appointment button and book a time that works for you. If it doesn't work, send an email to questions@mortgagemomradio.com. I will get you hooked up for a time that works for you. If you want to call and leave a message, same exact thing. They're taking calls during the week, on the weekends. You're going to get the information that you need. If you're listening to the show and it's Saturday or it's Sunday, do not hesitate. Get on there. If you've got the phone app, you can book it through that as well, but get on the website or call the office. It's the same number to call as it would be to text to make sure you're getting your once a week link. So call the office. It's 844-935-3634. Get that free consultation. Text the word mom to that same number. Get that phone app. Start playing with numbers. Start watching the YouTubes, listening to the podcasts. Get yourself prepared, get yourself educated, and then let us get you rolling in the real estate portfolio. So I think it's really great. All right, so we've got Jeff's on. He says, hello, ladies. As you know, I am being forced to sell. I have a couple questions. Do I need an agent? And can you use the property appraisal for a selling price? You want to answer that or you want me to?
Okay. I highly, highly recommend that you have an agent because statistics show that properties sell at a higher value with an agent. So it goes in the MLS, it goes all these different websites and online advertising. They really know how to market your property. They're going to come in and help you stage the property, tell you what you need to remove, tell you what you need to do. They're going to give you that advice. On top of that, you need somebody on your side to negotiate a contract for you. It doesn't matter whether you sell it for sale by owner or, you know, you sell sell with the buyer having an agent, you want somebody to work for you and knows that contract. I highly recommend that you have an agent representing you. Also with disclosures, you're going to get packets of disclosures, and you're going to look through some of these and go, I have no idea what I'm supposed to do. That agent's going to guide you and help you and answer your questions. Very, very, very worth the money that you're going to pay in commissions to keep you out of court. Huge, I think, get an agent. As far as the appraisal for the selling price, appraisers are generally a neutral, like, third party, and they come up with a value based on area home comparables. So what's listed, what's sold. I think it's a really good general idea, but if you haven't done one already, save yourself the money and call an agent and ask them for what we call a comparative market analysis, or a CMA.
Yeah, I was going to say, or a CMA. Just call a realtor in your local neighborhood and say, would
Yep.
you give me a CMA?
Yeah, or just say, hey, I want to sell my house. I don't know what the values are. Can you help me out? Absolutely, they'll help you. And, you know, if you're not comfortable with meeting somebody in person, tell them, say, look, I'm not ready to move yet. I just want to get an idea. Can you help me? And a good agent will give you the information that you're asking for and not make you feel pressured. But by all means, yes, use an agent. You'll get more money and you'll get better representation and hopefully stay out of court.
Yes, exactly. And I have to 100% agree with your answer. So I think that was perfect. You know, Uncle Jeff, you're in Florida. You got to sell. You got to get closer to the family.
Florida is hot right now. It's like
Florida
that
is a very hot market.
crazy.
Yes, it is. And so you know, use an agent, and we definitely suggest that for sure. You're going to get more opportunity, more buyers seeing it, which means that they can, you know, try to bid and drive up the price a little bit, get you more out of the home.
And if he's in Florida and he's in a senior community, which I hate saying at 55.
They're not. I don't believe that they are.
Yeah. Again, disclosures. So you got to watch different areas around the country have different things that you want to be protected from as a seller.
Right. Yeah.
Agent all the way.
Nope. I agree totally. All right. So we are going to go to our last quick break. By the way, I love the cow. He's got to stay. We've got to do the cow commercial at least every single week because I just love him. So we already missed that one, but we got one more good commercial for you guys right now we're going to do. And then when we get back, we're going to keep talking about removing that mortgage insurance, even if you don't have the full 20% equity.
Yeah.
How do we do that, right?
Absolutely.
So here we go. All right, and welcome back to Mortgage Mom Radio. So that was just a quick, really fun one.
Yeah.
Really fast. Again, if you guys are listening by radio on Saturday or Sunday, you guys are listening to an actual radio commercial. You're not getting to see the really cute commercials that we create for the YouTube,
too.
right?
They're not like ones that you're like, skip ad.
Right. Well, we truly do this live. People are watching us do it. They're asking us their questions. We're reading it. We're fumbling on our words. It's truly live. We're taking the sound and we're sending it to radio for the weekend. So if you want to watch us do it live in studio, you guys have to text the word mom to 844-935-3634. Heather's going to spell that for you.
That's 844 WELEND and the number 4.
Yeah, pretty easy. So text the word mom to that number. You guys want to get on the calendar. You want to talk to somebody, call that number. We've got Jenny answering the phones during the week, and I
think I'm on this weekend.
There you go. See that? It's Heather
you
on
talk to
call.
Me, call me.
That's right. She's ready to go. She is ready to go.
You want to talk Halloween costumes? You want to talk refinancing? Bring it on.
Right?
Yeah.
But if you want to see our cute little commercials, you have to actually watch us do it live. So if you text the word mom to that number, you will get a link once a week that tells you that we have gone live. And that way you can interact and be part of the show. Ask us your questions. We're going to read them out loud and answer them for you. So we would love for you guys all to participate and be part of it. If you guys are watching the show right now, it is every Wednesday. We go live at 1 p.m. on Wednesdays Pacific time. So make sure you guys are ready for that. Maybe put a reminder in your phone. But if you are watching right now on YouTube, we're going to ask you guys to please give us a thumbs up on the video. That really does help the algorithm. If you've never subscribed to the channel, please subscribe. And if you click that notification bell and you click all, YouTube will also let you know when we have gone live. At least it's supposed to. It doesn't always happen. I've subscribed to channels that I don't ever get the notification the way that I'm supposed to, which is why I created the text the word mom part, so that way you get a link and you can literally click on the link and you know that no matter what, you're going to get that link every week. So make sure that you guys do that. Okay, so we've got like 3 minutes left of the show, and I want to talk about somebody that has bought a home recently, has equity, but doesn't quite have 20%. what do we do to help them out? And that is actually, something that we just did for the clients that you were talking about. So I've got clients that bought a home in June, had an FHA loan. They've now got 25% equity because property values have gone through the roof. And we are doing a refinance to a normal old conventional to just get rid of MI. You have a client who had a ton of equity.
By that much.
Right. So they bought the property when we did the purchase for them, if I remember right, they bought it for somewhere in the 600 range.
About there, yeah.
Yeah. And when we got the appraisal in, it was like 780.
It was close.
50.
It was close to that. Yeah, they were just off by a little bit. Yeah.
Just a little bbit.
Yeah.
So what did you do to get rid of the mortgage insurance because we didn't quite make it? And this is for anybody, whether it's 10%, 15%, or you've got 18 or 19% equity. We can do this for anybody in any transaction.
Yeah.
So
we did what's called buying out the MI. And basically what happens is when your appraisal comes back in, if it comes in short, then what we do is we look at seeing, okay, instead of you paying your MI every month, how much would it cost for you to make one payment during that refinance to just buy it out completely and not have it anymore? And that's exactly what we did. And it didn't cost a whole lot of money. Matter of fact, it was, for them, it was less than paying the MI for a year. So basically on that 12th, 13th month, they're now saving the money
every month.
And they've got the lower rates that are still out there today versus saying, oh, you have to wait for 6 months or 7 months and take a higher rate. Nope. We got them in there now, got them the lower rate, got the MI off, and they're still saving money at this point without, factoring in
the additional, right, exactly, paying it down or having to wait for the property values to go up.
And there was no money out of their pocket for that. We just financed it into the closing costs, and they are totally happy.
Yeah.
So,
and they're saving how much per month?
Over $300.
Yeah. So we're not telling you that if you guys call us right now that we can guarantee you that we're going to save you $300 per month. Of course, your savings is going to be based on your loan amount, your property value, your interest rate, your credit score. What interest rate you get is based on your credit score and how much value and equity that you have. So these things are going to change. We can't promise you what your savings are going to be, but I can tell you that if you haven't looked into it yet, you really should. You should be calling. You should be finding out, what could you do for me today? I don't think I quite have that 20% equity. I don't think, actually, I think I'm probably about 10% equity, but what would the option be? What would those numbers look like? The nice thing about my team is that there is nobody on this team that are pushy salespeople. That is the nice part, is that I call them all educators. Everyone on my team is an educator. Our goal is to take you through what does it look like? If you do this, what would that be? What is that going to cost you? How long is it going to save you to recoup? How long will it take?
I love you always say the math doesn't lie. And I tell people that all the time. The numbers are the numbers. They're not going to lie. So that's what we go over. This is how much you're saving. It's going to take you this long to where you recoup it. Almost in every situation, it's worth it.
Right. Nope, absolutely. And I wish sometimes that these guys were slimy ball salespeople, and closing on deals crazy, because obviously that's what a company needs. But that is not what I've asked them to do. That is not why I've hired them. It's not getting to know the personalities of the people that we've brought in on the team. That's not what it's for. It's not who we are. It's not what we're looking to do. We've turned away more loans than we've actually closed. And that is the God's honest truth. So, again, get your free advice, get your free consultation, not advice. I know you always tell me don't use the word advice.
We're educators.
We're educators. Get your free education, get your free consultation, and know what it would look like. Then you sit, you think about it, you decide, does this make sense for my family? Does this make sense for me? And then you get back to us and you let us know. And we're not pushy, and we're not going to bother you, and we're not going to continue to hound you, but we are going to take you through the numbers. We are going to show you the math. The math doesn't lie. And at the end of the day, it is your choice whether it makes sense for you to move forward. But even if you don't think you have the equity, but you bought your home anytime in 2020 and as recent as, early 2021, March, April 2021, you should be getting on the phone and calling us if you have mortgage insurance. Now, if you bought the home and at the time that you bought it, you bought out your mortgage insurance at that time, there's probably no reason to refinance. Interest rates were better. We're going to say that right now. Interest rates were better last year and early this year than they are today. But I'm also going to tell you that interest rates are continuing to rise. They are going to keep going up. So you want to get that lower rate that is here today locked in with getting that mortgage insurance removed. Take advantage of the best of everything, save as much as you can, and then hunker down and have a loan that you know that you can count on until you're ready to leave that house, no matter what that time frame is.
And one thing I will say too is I know I've gotten questions before of, can I do cash out if I have to buy out the MI? That's a great question too. So you want to refinance and get rid of your MI, but you also want to pull cash out. Can I do that?
Yeah, you can do that. Now, we can't buy out MI so you can't pull out cash if you're over 80%, if you're right. If you don't have 80% equity, you're not pulling out cash. So, we can either get rid of mortgage insurance and pull out cash.
Right.
Or we can get rid of mortgage insurance.
Right.
So there's two different options there, but to know what your options are, you have to call or you have to get on the calendar. You've got to book an appointment. You can get an appointment for today. You can call the office today and you can talk to somebody today. We work all weekend. Like Heather said, she's the one. She's actually on call this weekend. So that is who you will be talking to if you reach out, this weekend.
And I'm happy in the mornings or in the evenings. I understand schedules. I understand kids, especially with Halloween this weekend. I'm still on. So if you guys need me, let me know. But yeah, I mean, I'm available. I'll make myself available, if it's within reason. So
just not during trick-or-treating hours.
Oh,
we do have to give it that. I mean, you do still have the little ones.
I do have the little ones. Yes, but yeah, I don't know. What are trick-or-treating hours, like dusk to whatever? But if you need to call later and you're off on Sunday, I will make it work. Just call and let us know. We'll make it work.
Absolutely. So thank you again for watching. This is Mortgage Mom Radio. How do you guys know when we go live? How do you watch us do it in studio every Wednesday at 1 p.m. Pacific time? Will you text the word mom to 844-935-3634. That's 844 we lend for you. Heather's going to spell it.
WELEND and the number 4.
So text the word mom to that number. That'll opt you in. You'll get a link once a week so you can watch us do it live. You can be part of the show. Ask us your questions. Put them right in the feed. How do you give us a call? Well, it's that same exact number. It's WELEND and the number 4. We lend for you. That's 844 we lend for you. How do you get on the calendar? Go to mortgagemomradio.com and click that appointment button. If you've got the phone app, you can click the appointment button.
Love the phone app.
You want to send me an email and you've got the phone app, you can click the Ask Mom. It's going to send me a message. So there's tons of way to get a hold of us. We're open 7 days a week. You can get somebody always, and we're here to help. We'll be back next week with more information, education, and with Miss Heidi Slagle Points.
Yay, Heidi.
All right, you guys all have a great one. Happy Halloween. Talk to you later. Bye-bye.
Debbie Marcoux, licensed by the Department of Financial Institutions, NMLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.